Hi everyone, welcome to the show. The videos that I normally take days, sometimes weeks to create, so a lot of information I see just bypasses everybody and just goes out without anyone noticing. So the purpose of these videos is to make more frequent videos that comment on what's happening. So the first thing I want to comment on is the coordinated central bank's action to enhance the provision of the US dollar liquidity. So right now, the banks are setting up swap lines between each central bank so there's enough liquidity, and they're trying to backstop a liquidity crisis. Now, that's something to be very concerned about when you're hearing stuff like this, and that what all of the sell-offs that we've seen in the market, right? This was a liquidity crisis. When there's not enough liquidity in the system, that's what happens. Something big happens. And if you look at the volume of the indices, it's at like an all-time low type of volume situation. So we have less buyers and sellers in general. Now, what's happening is, let me just say, even with all of the market turmoil that we're seeing, the Fed has raised interest rates in the past, and the markets have gone to all-time highs. We've seen, in 2008, the market rallied to its all-time high while the Fed raised interest rates and paused. It happened in .com. If this chart was further back, it probably happened a few more times. It happened in 2018 as well. The Fed raised interest rates. The market kept going higher and higher until it all broke, and then they lowered it back down to zero. Well, right now we've had a year of this downtrend, and now we're starting to peak above the 200-day moving average, which is a good sign. But keep in mind that volume is low, and we're in the market condition where a lot of trouble is headed our way, right? So just with the banking system, so this is a reverse repo operation, and the reverse repo, what it means is the banks give the Fed cash, and then the Fed will give them treasuries in return. So this sounds counterintuitive, right? But when you deposit money into a bank, that money isn't really theirs. It's a liability of theirs. They owe it to you. Your checking account has your money in it, and it's a liability to you. So they have cash, and they need an asset to match it. And the treasury is the asset that matches it. So we've seen a record surge in reverse repo. We're at like $2.4 trillion in overnight reverse repo operation. Overnight just means it's an overnight loan. So $2.4 trillion. This is money markets. Certain banks are lending cash to the Fed, collecting like 4%, and then they get it back the next day. So this is what's causing a lot of the turmoil in the banking system. We saw SVB as well as other banks have some really bad problems because depositors are taking their funds and putting it into money markets. They're taking their money out of the bank account and putting it into money markets that are giving them 4% interest. So the Fed is partly responsible for this high interest rate. And what we saw back here, so right here, this was March 2020. And we saw this, and this was an all-time high back then. This was a really big deal. And all of a sudden, it went right back down to zero. So what happened? They changed the regulations. All they did was say, you don't need collateral to back up the loans that you had. So that's when they all, started just printing money. And right here is when that expired. So it was like a year long. It was emergency regulations. And that's where we started to see this uptick. And it's continued. Now it seems to be leveling off, but the turmoil in the market is saying that it's not exactly over yet, right? And we're seeing more and more problems that come about. Now, why? Because, like I said, the banks need collateral, and this is one of their forms of their collateral. It dropped 46%. So if you're holding on to all this collateral and all of a sudden it's worth half, when depositors take their $1 million out of the bank and move it to a money market, you have to sell your treasury. That's down 46%. Your unrealized loss becomes a realized loss. And that's what the Fed and government decided to do. Back here, if you're a bank, you could borrow against against what it was worth back here, and you can get an overnight loan and borrow against there, and the chart's already saying like 350 plus billion dollars have been lent out. This isn't just U.S. banks, this is international, so the whole euro dollar system all over the world, these banks are tapping into this special program. But it's not just treasuries, and just treasuries is a big deal too. So you see that the market's soft, right? It's a week right now. When the government spends money, how they do that is they issue treasuries, and somebody buys the treasuries, and then they have money, right? So they auction off treasuries. So they dilute the supply of treasuries. When you have too much supply of something and not enough demand, that's how prices fall. And that's true with tokens, anything, right? You have too much supply and not enough demand, that's when it all comes down. Well, this is China's holding of treasuries, and it's declined over 250 billion over the past 2 years. So they've been they've been rolling off their treasury positions. They haven't been reinvesting. And yields are up pretty high, right? You can get 4 or 5% on short-term T-bills. So China's not interested in the 4 or 5%, and they're well where it matters, right? They're continuing to have this decline. And at the same time, you're seeing China partner with France to complete the first liquid natural gas trade using Chinese yuan. You're seeing China expand its cooperation with Russia in trade and energy. You're seeing China and Brazil looking to deepen trade ties for agricultural products. China, again, you can see the digital yuan try to sidestep the dollar. So all over, BRICS nations are trying to move away from the dollar. At the same time, we have high inflation, a weak treasury market, a government that hasn't stopped spending, and they're spending more by the minute. Now, the other asset that banks use, right? So they have to match their liabilities with assets. The other assets that they use are mortgage-backed securities. And the Fed has a balance sheet of mortgage-backed securities. So housing has declined rapidly as well with high interest rates. That puts a tremendous amount of strain on housing, right? Because your mortgage rate is based on the prices of bonds. If the interest rate's high, then the interest rate's high with mortgages. So you're seeing a steep decline, and the banks have a ton of mortgage-backed securities. The Fed has a bunch of mortgage-backed securities. Even so, Blackstone defaulted on their Nordic fund, which had a commercial mortgage-backed security. So it's not so much that Blackstone cannot afford their mortgage-backed securities, it's that they want to renegotiate. Houses are cheaper, so why would they pay a high premium for commercial mortgage-backed securities if they don't have to? So that's why they defaulted on it. You've also seen their BREIT, so Blackstone's BREIT, which is a private real estate fund. They stopped allowing people to sell it. They won't allow anyone to sell it. So the SEC is concerned about crypto. Meanwhile, Blackstone makes it so you can't sell your fund if you bought it. So there's a lot of different dynamics at play right now. And I'm not saying that prices can't go higher, right? We can see right here, clear as day, it's still possible for prices to keep increasing even with all this craziness in the market. And on Friday, so this Friday, me, Ryan Solomon, Rashid from Alliance Block, the Crust Network, David Chom will be in a Twitter space controlling privacy and data in the crypto with the XX network. So be sure to tune into Twitter. It's at 11 a.m. my time, so Central Standard Time, March 31st, and I'll make sure to retweet that prior to it. So be sure to join us. Now, this is a senator asking Janet Yellen about the crisis that we're having.
How much the total deficit spending is going to be?
We had an economic collapse that was caused by
Right,
the
and we
pandemic.
were certainly coming out of that because there's all this pent-up demand and a sloshing around of trillions of dollars. So I'll answer that question for you, too. The first 3 fiscal years of this administration, the total deficits would be about $5.7 trillion. So now you're here testifying about the president's budget. How much are the total deficits over that 10-year period according to the president's budget? You don't know that off the top of your head? Yeah, I'm running out. It's $17 trillion, okay?
Yeah, that's
You're going to drive the debt from somewhere around $32 trillion up to about $50 trillion, correct?
yes. But what I believe is the single most important metric for judging the fiscal stance of the country is real net interest.
So I brought this up before in another video, but it highlights how important this is. And this is what happened to the UK. So the UK's gilt market, which is their version of treasuries, completely just tanked. So the gilt market, excuse me for the delay, the gilt market, which is UK gilt right here. So the gilt market, which is a pretty large market, it's like I said, the United Kingdom's treasury market. Look what happened. It completely just sold off, right? This was bigger than 46%. This was like 60 something percent. This is from peak to trough. It was a pretty substantial move. And this is where the central bank stepped in and put a floor underneath the bond market. So that's what I'm saying is going to happen at one point. If we don't see foreign investors come in and buy bonds and bid it back to here, what's going to end up happening is the central bank's going to have to come in and do that, right? And that's going to put more issues with the debt. We're going to have debts and deficits balloon even further. And in the clip, they say $50 trillion. This is what broke the camel's back in the UK. Very possible that it breaks the camel's back in the United States as well. You could argue that that's already happening. I get comments that I'm fear mongering and all this crazy stuff, but this is real. This is happening right now. You have to think of some ways that you can defend yourself against some type of situation like this. Now, they're talking about raising $4.7 trillion in taxes, just my taxes alone, right? Most of the time I would get a refund. Now that's not true. I'm making about the same amount, yet I'm not getting a refund, right? So this is adding up. Modern monetary theory, which Janet Yellen most likely is part of that group, is their whole idea is deficits, debts don't matter, just the interest payment matters. And when inflation gets high, what you do is you tax. You don't fight inflation with raising interest. You just tax the citizens so bad they can't afford food, right? They can't afford it. So that's the big problem with modern monetary theorists, and it's coming to light now. So Eleanor Tourette reported that Gary Gensler is asking Congress for $1.6 billion for 5,473 people at the SEC, which is around like 200 grand each, right? So these are our civil servants, right? The people that are supposed to protect us, the people that are supposed to be looking out for us, make sure that we're not in trouble with frauds and scams and everything while they're collecting a hefty sum from the government and adding to the problem of this treasury market. The whole bond market is just hanging by a thread, and they're issuing more treasuries and adding more sell pressure. The other thing is the Restrict Act proposes 20-year jail term for U.S. citizens for accessing banned apps. So we just saw like this TikTok thing come in, right? They're saying if you use a VPN to access these banned apps that the U.S. controls, you can face up to 20 years in prison and $250,000 fine. So think about this in the whole Internet of Value context, right? They tell you what you can and can't use, and if you go against them, the punishment is so severe that you don't go against it, right? So the this is going to have problems. AOC is just one of 7 no votes for the Restrict Act. So say what you want about politicians, right? AOC actually voted against this. So that tells you just what exactly we're facing. So the majority are voting for the Restrict Act, which can give you 20 years in prison just for using a VPN and downloading TikTok. This is Joe Lubin talking about Ethereum.
Money crypto people issued tokens that are rightly seen as securities. Tech crypto people are just technologists. We're just building infrastructure that the traditional economy can use and our economy can use, and you don't want to regulate innovation.
Being the co-founder of Ethereum, I want to focus on Ether for a moment, because there was this lawsuit brought by the New York Attorney General against KuCoin. Within that, the New York AG suggested that if Ether could be a security. As part of that, they say that the shift of proof to stake has incentivized users to own ETH due to the pooling method and the nature of the way the Ethereum blockchain works. What's your view on that? Do you think it's a security?
So anybody can say anything. It doesn't make it true. It's unfortunate that that sort of side swipe was made, but I don't think it's all that relevant. Matt Corva and Bill Hughes wrote a piece on Consensus's blog describing exactly what's going on with the Ether token in opposition to the claim. And there's another great piece by Bill Hughes called Money Crypto versus Tech Crypto on CoinDesk that will really help people understand. It's a short piece.
So ETH never had a problem because they're a proof of work, right? And kind of mimicked what Bitcoin did. Now that they transitioned to proof of stake, the relationship that you have with a validator on Ethereum very well could be construed as an investment contract, because you have to pick, the validator that you're working with, and there's money involved. You get paid in ETH if they're rewarded, if the block is rewarded and they get paid, and they pay everyone that staked their ETH. So, the new structure of ETH 2.0 is going to have a lot more problems. And Gary Gensler even said on record that he thinks proof of stake is actually a security. So we're going to see more coming out of the SEC, unfortunately. The markets are forward looking. So XRP's price has been moving up, and we had this very long area of resistance. So this is like 700 something days that we've had. So from this peak all the way till when we broke out, this was 700 days, and we just broke out of it. Now we have to break above some area. So this whole area, right? So this is where we wick to. What we want to see is for this to blast above this and then use it as support. And then the next area we want to see is this area, then this area, and then this area. If it can keep climbing its way up, it's a really good news for us XRP holders. Now, if you're not part of my Speakeasy, please join my Speakeasy. I put information here from time to time. I think you guys really like it and enjoy it. So please remember to like and subscribe. If you enjoy content like this, please consider joining my Patreon. Remember to hit the bell.